Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Kevin Mahn, Chief Investment Officer at SmartTrust. Kevin, it's great to see you as always. Welcome back to Trade Talks.
Thank you, Jill. Thanks for having me.
And Kevin, it's so interesting. When we had this conversation at the end of 2019 in studio back at Nasdaq Market Site, it was certainly very different than what 2020 evolved into. We were talking about earnings, the election, all the typical things that an investment officer would look at going into the year. And of course, it became all COVID-19 all the time. And of course, we had the election thrown into that as well. As we get into 2021, do you expect volatility just to evaporate from the market, or do we still have some room to work through here?
No, I think volatility will certainly dampen in the new year, but the days of heightened short-term volatility, unfortunately, Jill, are not behind us, as there's so much uncertainty ahead as it relates to COVID-19, obviously the worldwide and effective distribution of approved vaccines, and ultimately what's going to be on the legislative slate coming out of Washington, D.C. You know, it's funny that you mentioned 2019 when we last met, because I recall that our theme for 2020 was the three big E's, as you correctly point out: earnings, election, and the economy, given their interconnected factors. And that quickly became the year of the COVID-19 pandemic. As we look ahead, Jill, we think 2021 will be the year of the great reopening of the global economy. And that leads to some potential investment opportunities.
Well, let's certainly hope so. And of course, as it's appropriate, healthcare, there's definitely some opportunity there.
Yeah, certainly COVID-19 served as a very painful reminder of the need for innovative healthcare solutions across the globe. Unfortunately, there'll likely be even more rare and chronic diseases after COVID-19. And generally, the solutions for those very types of diseases come from smaller cap biotech companies. And what we've seen over the last 2 years, Jill, is an increasing pace of M&A activity of larger cap pharmaceutical companies coming in and buying those smaller cap biotech companies. In fact, last year, we saw a record $254 billion in M&A activity of smaller cap biotechs. We think that trend continues again in the future.
And Kevin, looking into 2021, do we start to look at international equities at some point?
Yeah, a lot of investors appreciate the benefits of diversification, but they often leave out global diversification when considering their asset allocation strategies. Many investors, in fact, have a home country bias, and as a result are often under-allocated towards international equities. And that actually served them well over the last decade, as U.S. stocks outperform international stocks. As we look ahead to 2021, we think there are a number of different reasons why investors should consider and keep international stocks on their radar. One being an expected weaker U.S. dollar. Two, cheaper relative valuations when compared to U.S. stocks. And of course, the expected global rollout of the COVID-19 vaccine. We're very fortunate to partner with Dorsey Wright on our International Momentum Trust strategy here at SmartTrust, and we think that could be a potential option for investors to consider who are looking to jump back into international stocks again.
And Kevin, your third theme here, sustainable investing. Not only are consumers making values-based purchases, but it is really spilling over into investing as well.
Oh, absolutely. ESG, or environmental, social, and governance factors, is becoming a very large part of the investment landscape. In fact, it's no longer mutually exclusive for investors to want to feel good about the companies they invest in and also feel good about the returns that the stocks of those companies potentially generate. We're fortunate to partner here at SmartTrust with both Just Capital and Argus Research to look at how companies treat their employees, how they treat their clients, how they give back to the communities, if they're good stewards of the environment, and do they deliver a reasonable return to their shareholders. That's very important in determining just behavior. And then looking at the investment merits of the company builds a very powerful equation that we think will make sustainable impact investing part of the mainstream of investing for years to come.
All right, Kevin, great to see you as always. Happy holidays to you and the team at SmartTrust, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.